Welcome everybody to the next bar. It's fantastic to see you all here. Thank you very much for popping in to what's an exciting project with my partner in crime, Mr. Camron Malik, um, independent investor and educator extraordinaire. I just want to check a couple of things before we kick things off. Um, can you see our webcams in your view? If you can just let me know in the questions box, that would be wonderful. Yes, you can. Can you see both of us? Oh, you've got both.
Great.
Fantastic. So
Great.
wonderful. Fantastic to see you both. Thank you very much. So many wonderful people here. We know many of you very well indeed. And the two maestros. Thank you very much, Brian. That's very kind of you. Thanks for the heads up on the AV, Wayne. And g'day to Colin and Jay and David and Simon and Ian and Roger and everybody else who said hello in the questions box. It's always really appreciated that you do that. It makes us feel not alone. I'm just talking to a blank screen. So just to give you a little bit of background before we start into the agenda, which I probably should have put the whole thing up to start with, but this is the first of what's going to be a series.
It's our first one, Mike. Yeah, it's the first one. No worries.
Be gentle with us, guys. Okay, be gentle with us. So we've got a little agenda, and you were sent that via email or in Telegram, and so we'll sort of stick to that. But there were really discussion points. We want to keep it light while being of good quality and informative. Of course, Cam comes to us with a wealth of hard work and a great analytical mind, and then I'll chip in as we go to with things that appeal to me. And of course, we'll give some time at the end for you to ask questions, maybe even suggest a couple of directions you might like us to go going forward. That would be awesome. It's your session at the end of the day. We're just two traders having a chat, but we want you to get maximum value out of that and give you something a little different. Anything you want to add to that in terms of where you're coming out?
Not really. I think it's just exciting for the guys to, I mean, obviously we chat off the airwaves and talk about things we're doing. And yeah, that's it. Really, we've talked about this for a while. And it hadn't really come to fruition, but we thought it was a good idea, and we thought, look, it'd be nice to just have a bit of an informal chat without it being, normally most of you just see us doing a presentation. So today's definitely not a presentation. Or just our thoughts on the market, what's going on, and hopefully a few varying views as well.
Absolutely, absolutely. So we thought we'd kick off with just doing a little bit on what we're seeing in terms of markets now. What's sort of driving the major asset classes at the moment? Because that puts a lot of the other things that we're going to talk about into context. And so just a few things that we sort of identified. Certainly, if we look at a lot of charts like now, and I commented on this earlier in the week, in that there's many of the major assets look as though they're in sort of range, waiting for the next wonderful thing to come along. So be it the major US indices or Bitcoin or gold or even some of the stocks, a lot of them are seem reluctant to push either significantly above or break levels to the downside. Cam's got some things to talk about in a moment relating to that. But is that what you're finding, mate?
Yeah, I mean, yeah, we are and we're not. I mean, if you just look at what's happened, we've just gone from having tariff, our sort of independence type day on the 2nd of April. And by the 7th of April, the markets were, well, massive correction, 20% down on the Nasdaq, 30% down on Bitcoin, and so on. So we've gone from there on the 7th of April. Okay, now we're what, 6-7 weeks, and we've just done this big V shape on most markets. Some haven't completely recovered. Some of the stocks, like Tesla and so on, they haven't fully recovered. So I get it. I think sometimes we get a little bit short-term sighted and just forget
Yes.
that, wait a minute, 6 weeks ago or 6-7 weeks ago, it was a completely different story. We're kind of going, oh yeah, there's not really a lot going on, but I think that's kind of pretty much in the last week, right? As the market,
Yeah.
to
Yes.
me, I totally agree that the markets are going a little bit sideways at the moment, but it's more near term. It's happened in the last week, and we just got to look at what's happened before that. It was just a colossal rebound in the markets. While yeah, we may be digesting at the moment, but considering what's happened, the sideways action, I would definitely say, is still positive. There's nothing negative at the moment. Certainly, there's a lot of, I don't know the word for, I want to say skeletons that could come out of the closet, but just kind of stuff that could really derail us. But
For sure.
even with that, I mean, okay, not to labor too long on it, but like look at what was going on with Russia on the weekend,
Yeah.
and zero effect on the markets, like nothing. So, I think some of these things like the tariff, they do start to run out of weighting and steam in the markets of those shocks. Even the last shock from Trump, which was about the European 50% tariff, it was a quick drop and a bounce.
Yeah, for
Um,
sure.
so
We
yeah,
saw on Monday the 25 to 50% steel and aluminium tariff alterations, of course, sent Europe and Australia into a little bit of a tizzy for a day. But you're absolutely right. I mean, if you look at the broader context, and the last 6 weeks feels like a very long last 6 weeks, I have to admit. But the impact of the next market shock, and the next market shock is appears to be diminishing every time there's a new one comes onto the table.
I think
Sure.
so, and there will be a new one, but I do think that the tariff, the war thing's completely just been accepted, I think,
Yeah,
and the tariffs. So I think the biggest threat on the tariffs is China, right? That's the biggest
sure.
threat out there. Of if China, if that derails, then that will bring, certainly uncertainty in the market. And what we've seen is anytime that deadline, in fact, we need to put a little bit of a ruler on that deadline,
We do.
um,
That's a good call.
because normally everything kind of calms, everybody forgets everything, and it comes on our toes, and suddenly the market starts shaking a little bit because of, okay, well, what's now going to happen?
Yeah, and of course now we've got Wall Street talking, which has upset Trump dramatically, is talking talking about the taco trade, which the Trump, for those of you aren't aware of that, is the Trump always chickens out trade, which has upset him significantly. So when there's a market
Yeah,
short, then markets are just pushing off and said, right, we'll just wait till it stopped, and then we'll trade the upside when he puts a pause on, or diminishes the initial shock to markets. We'll just trade the return, take advantage of that. So that taco trade is possibly one worth having a look at if there are any future kind of induced gnashing of teeth. And of course, part of that is obviously, if we look at the impact of tariffs, etc., then the major concern is the potential impact on global trade and potentially downside economic pressure across the board. That the World Trade Organization suggested a fairly significant dip if some of these tariffs in global growth, if some of these tariffs actually come to pass anyway. And so every bit of economic data seems to be either playing into that narrative or refuting it. What are your thoughts in terms of what you're seeing? In terms of is the data starting to reflect any sort of reality of tariff-induced slowdown?
I don't know. I think. Well, I mean, we've got a slide a little bit further down, which just related to how much maybe maybe we've run on. Mike, do you want to just pop that up? Flick
So
through a little
yeah,
bit.
it's me that's got the
Uh,
contract probably.
we'll
I'm
we'll jump
following.
backwards and forwards as we just pulled a few slides together just
Uh,
as prompts. But
I thought this
okay,
chart
so
you put up was
okay,
really impactful actually in terms of putting things into context.
yeah, so that came across the desk, and I'm like, wow. So yes, for anyone that hasn't seen it, I did post it this morning in my Telegram, but basically, yeah, the old sell in May and go away. Maybe we'll come back to that in a bit, but we had the best Mays for 35 years in the S&P. And that's very much driven by the tariffs of just, money coming back into the market. But the next slide, we'll maybe come back to this, Mike, but yeah, I think the next slide was interesting to me as well of like in April, pretty much all-time highs of the amount of customs tax that is actually being collected in the US. Now, the big question there is, well, how much of a dent is that actually going to make, to the
Mm.
debt, that was 16 billion, and I think 2020, whatever, 22 billion in May. But I think the overall thing is that Trump is just rolling everything back. I
Sure.
almost think they may have, which is okay, because if you've got to think about us as traders and investors, right? Like, it seems like politicians, they have to kind of say something and stay the line. I quite like Trump in the fact that he might just turn. And as trader, investors, or business people, you have to be able to do that. You have to be able to make a decision. You have to be able to say, well, maybe this isn't the right way, and kind of roll it back. And it does feel to me like they're going, and especially with Elon moving out of Doge and so on, they're kind of going,
Right.
you know what, we're maybe not going to solve this deficit issue with this. We maybe, it seems to be, or the narrative seems to be, that they just need to ramp up GDP and
And of
attack
course,
attack the attack the deficit in a different way.
of course, one of the things that, or one of the other things that normally would receive an awful lot of airplay, but seem to disappear, as is often the case with headlines right now, because the next thing comes along pretty soon, was the big beautiful bill which was going to add trillions to the to US debt, and justified when actually that was completely contrary to what was promised pre-election. On the back of, well, look, if we do that, then of course we can that'll stimulate growth. And then the other thing that popped along was the court ruling that Trump had operated illegally with his tariffs, which of course now is in
Yeah,
the
yeah. Wasn't there a ruling that it came back from court and they said that he can continue? I thought I read that this week or
I think
end of
it's in
last
the
week.
appeal process. The Canwally
Okay.
appeal process going, I think,
Yeah.
is where it sits. But again, it's a headline that's disappeared. Where normally, of course, that would be quite a significant uh, sort of, or two significant stories on their own, really, which have just disappeared. Um, Similar sort of slide there that you had come across, which I thought was really again stressing this, that it does suggest that tariffs in some way, shape, or form are generating some additional income. Of course, then there's the debates about where that income may go, but that's probably another story for
Or is it
another
enough?
day.
I mean, 22 billion is a
Yes,
lot of money, but it's not a lot of money when you look at the size of the
no,
deficit.
no, indeed, indeed. But all of those things, I think, uh, uh, are really what's driving markets right now. It is the trade issues. It is the 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 potential sort of debt stroke stroke trade deficit, and of course that potential for economic slowdown. So, as I said right at the beginning, I think is that these
Mm.
put a nice underpinning, if you like, to many of the other things that we're going to talk about. Um, but of course, two of the big asset classes um, that have sort of done pretty well in recent times are Bitcoin and gold. So we cover this from slightly different angles in terms of what our focus has been. But we thought it might be interesting just to have a little chat about what's happened with the two of these asset classes. So, Cam, you're as as you said at the conference at the weekend, and as you guys know that are part of your circle, have been a great supporter of the Bitcoin story. I'll hand this over to you to kick off the Bitcoin case, if you like.
Yeah. Okay. So I mean, obviously, I'm pro Bitcoin. I just put this chart together to make it a little bit fair. I think I thought I'd made it from the inception of Bitcoin, but maybe I didn't. Okay. Anyway, I mean, you can see, like I actually, when I started looking at Bitcoin back in 2020, I was looking at gold, and I just looked at gold, and I hope not to offend anyone, but like gold has just gone nowhere for 10 years, and it went nowhere for a little bit longer as well. And it's certainly come into play recently, in which we'll have a look at. But if you just compare, and my aged eyes are sort of weary a little bit, but I think that's 1,700% return, with
Yes,
opposed to gold at 176, and is that 215 for
115 on
S&P?
the SPX. Yeah,
So, I mean, this is just, completely, it's huge. It's huge to think that, really with gold over that time period, you've well, you've beaten the S&P, but only recently, right? I think it only
sure.
overtook the S&P quite recently, in comparison with Bitcoin. So I don't want to argue the point. I think there's a clear winner there. But maybe let's have a look at it since I think what did we have, Mike? We had it in the last year as
So
well,
this was
which is
this was the last 12 months, and you can see there the gap has closed. It's 54% versus 45%,
yes.
and the S&P 500 down to 12%. So despite the S&P 500's relatively good performance in 12 months, I mean 12%, 2.5%
Hmm.
in 12 months is relatively good for the S&P. But yeah, both Bitcoin and gold have been outperformers significantly for sure.
For
And
sure.
so, what do you think's driving Bitcoin, or what do you think's driven Bitcoin over the last 12 months?
Oh, I mean, it's been
It may
huge
continue to do so.
since. I mean, I think really since January last year, was the institutional adoption with the ETFs was absolutely
Yeah,
massive. So that was the
it was.
huge inflows, and I think we were sitting around, off the top of my head, about 40,000. Now we're sitting, up at
Mm.
105. So there's just been this massive adoption. The ETFs, fastest growing ETFs ever. Oh, sorry, that is my brother. Yeah, fastest growing ETFs ever. The amount of money that's pouring into the amount of people sort of looking at it now as digital gold, and then on the back of that, the big driver at the moment has been the Bitcoin treasuries, like Strategy, like MicroStrategy, who are buying Bitcoin to put on their treasury. And really, they were the biggest company, and now that trend is really starting to move, and move a lot. And you've got large institutes coming in, like Cantor Fitzgerald, have come in and say, hey, we're going to buy Bitcoin and put that on our balance sheet. Of as we know, fiat is going to zero. So when is it that Apple might put it on their balance sheet, or I think Microsoft vetoed it, they weren't going to do it. But that's been a major part. Obviously, sovereign wealth funds as well, putting money in, but also a lot of people using MicroStrategy as a vehicle to get Bitcoin, because perhaps they're not able to buy Bitcoin directly. So they've used MicroStrategy as a bit of a proxy, but that's been it. And I think at the moment now it's more of an institutional game, certainly in the last 12 months, I would say, rather than a retail game these days. The last cycle where
yeah, I mean, certainly
sorry,
the
go ahead,
ETF
Mike.
was a big deal, wasn't it? I mean, not only the ETFs per se, but also the ability to trade options on some of the ETFs. I think you can do that on a few of the bigger ones, which
Absolutely, with the
which means you
futures
can
market
short
coming
it. You
in.
can put you can put
Yes.
you can do a variety of option strategies which will take advantage. That's a massive benefit um, in terms of what traders can do. Uh, not only sort of the investor side of things, of course,
Yeah,
which just
traders in it.
adds to the popularity of any asset class, uh, and then of course CFDs, of course, mm, which
Sure.
uh, which of course you can do across an increasing number of cryptos. Um,
Yeah.
so in terms of going forward, if we look, say, for the next 6 or 7 months, so for the rest of 2025, what do you see in terms of Bitcoin for possibly the rest of the year? Maybe entry points or exit points or potential
Yeah.
reduction
I mean,
points in terms of what might happen next, I guess.
I mean, if you look at the analysts, maybe we should have put up some of the analysts of where they're thinking Bitcoin's going to go. It's anywhere from 120 to 150. You've got people saying it's going to go to 250. You've got people saying it's going to go to 1 million. My view, and I think I said that on the conference, is kind of around once we get to about the 120 mark, I think
Yeah,
120 to
that's right.
150 mark, I'd be looking to start rotating out a bit. But there's massive tailwinds, and I think the other
Sure.
major thing is that the fact that we've had no action on it, but that America have said that they're going to have a Bitcoin strategic reserve and put roughly 200,000 Bitcoin that they'd taken or that were confiscated from various activities or whatever, and they've gone, no, we're not going to sell that. Unlike Germany, who sold their 50,000 Bitcoin. So if I mean there's Senator Lummis has got this bill. She wants to get 1 million Bitcoin. I mean, that's a huge amount of the supply. When we consider, okay, there's going to be 21 million Bitcoin, but there's a hell of a lot lost. So if that comes into play, I think we're looking at a completely different picture. If America start really buying to get to this 1 million Bitcoin, then who knows? We could be looking at 250 up. But I think, yeah, for me, I'm going to be looking about 120s, start taking something off the table, looking for the inevitable pullbacks in the market,
Sure.
to possibly get back in. And at the moment, it's difficult to buy. I mean, we bought a little bit on the weekend, more of a trade around the 103 mark with the guys. But at the moment, I think pullbacks below 100 are probably where it's at. If
Yeah.
we do get a pullback now, otherwise I think we're probably going to go a bit higher, back up to all
Sure.
time highs.
And of course, because we're doing a series, guys, we can sort of revisit anything that we talk about here. This is a launch session. We're giving you the sort of things that we're looking at, so we can certainly revisit that. But I would tend to agree. I think 120 looks like a point at which it might just get a little toppy in the short term. Can't wait for the pullback. Now, I pop this up. So if we reduced 12 months to 6 months, which is still a fair chunk of time considering what's gone on. We've had essentially the post-election impact there and inauguration, then of course a chunk of other stuff which appears to be popping on Truth Social every couple of days. The difference is quite significant in that Bitcoin since early December has only popped up around about 6.5%, nearly 28% on gold. And so in terms of the why that might be, so we had this early surge post-election on Bitcoin and other cryptos, simply because one of Trump's pre-election promises was regulatory reform, and then early enthusiasm, because he likes cryptos. But we've got other things going on which I think are contributing to gold's move higher. Obviously, one of the major narratives surrounding the tariffs is the potential inflationary pressures that they may exert, providing, of course, there isn't a complete chickening out of it all and reversing everything is put in place, which is unlikely. I mean, whatever happens, there's still going to be a likely 10% tariff on any imports into the US. And until normally we would expect, with rising treasury yields and a less dovish Fed, I mean, if you sort of wind the clock back even 2 or 3 months, the expectation was that there would be a pause in January, there would be a potential pause in March, but June was when it was supposed to all happen. Now it looks as though I haven't actually looked at it for a couple of days. Do you want me to pop it up? Let me just see if I can very quickly. If we just put the CME up. If we just pop this up and just see what the expectation is. So it was almost a gimme that it was priced in for June. But if you look at it now, there's a 95% chance there's going to be no change at all in June. We'll look at July, and even that's looking a little potentially shaky. And this is a massive change. It's almost a complete turnaround. I can just see at the bottom. So if we look back a month ago, the expectation was that there'd be a 55% chance of a rate cut in July. Now that's almost disappeared. Well, it's down to 20%. So essentially the Fed looked very unlikely, much to Trump's dismay, I'm sure, looked very unlikely to cut rates even in July. That's one of the reasons why Treasury yields seem to be popping ever higher. And I think they were at the highest, they hit their highest since 2023, Cam, is that right?
Yeah, they are at their highest level and not really attracting the buys that they're looking for. So that's a wider conversation, that one, yeah.
Yeah, so if we yeah, sure, I can put that. Okay, I'll put that link so you've got that, guys, into the chat. If you want to ever go and have a look at that. There we go. Those were nice guys. There we go. Okay, so you would expect on the back of that for the US dollar to be flying high on the back of increasing treasury yields, on the back of a less dovish Fed. But of course it isn't. It continues to look very weak and is potentially on track to test 3-year lows. If you look at the US dollar index, breached that, and we are probably technically on for more and more selling. And the reason for that, at least one of the key reasons for that, is the potential threats to the economic state of the US. If that continues, irrespective of what happens to treasury yields, you're going to potentially see not only a continued drop of the USD, but also, of course, what's that going to result in? It's going to result in more in gold rising. Combine that with the inflationary pressures, potentially, despite the 24, I'm going to solve wars in 24 hours promise, because there's no progress at all in the Middle East or the Ukraine from a geopolitical point of view. And I need to do a bit more digging on this, but there is a suggestion of emerging market central bank buying of gold is increasing as well. So
Yeah, China have been, buying gold. China have been buying loads of gold.
yeah,
So that's definitely part of it. And I guess also, Mike, just to add in, not to forget that, the US need to refinance this year as well. So there's this kind of imbalance of, the rates being high, um, but they need to be high to attract money into the bonds, which they're not attracting, but they need the rates to be low to refinance. So I don't know. The only conclusion
it,
from that is I have just think money printing, which
yeah,
will then pump the markets,
which of course is what they've suggested with rising the debt ceiling, of course, to allow them to do that. But it's I don't I don't see an I mean, this is very unusual. This set of variables is really very unusual to see them happening like this. Um, Generally speaking, there's a market saying then if gold's rising with yields, then something's wrong. And there are many reasons why you might think something is wrong. So that's why I suspect that gold will still be a good place to be um, in the coming weeks, if not months. But really, I mean, we wanted to put a couple of different cases forward, but I think there's merit in looking at both of these assets with some rigor, and then it's really up to you guys in terms of how you actually may take on opportunity of what they may be doing and what they may not be doing. Um, so this is between a rock and a hard place, says Jace. Yeah, I think that's probably a reasonable description. How so to summarize this section, Cam, where are you?
Oh well, look. I
Let's
mean,
pump
I'm
price.
always I'm always gonna be I'm gonna be on the Bitcoin camp. But I think I popped in a little chart that I did have the idea. I think it's on the next one if we've still got it. That I popped in a little idea is that you could maybe have the best of both worlds, and we could look at you know look at Bitcoin and gold as a pair trade. And given the fact that I wanted to put up the chart, and it's been kind of flying around the internet that there's a theory that Bitcoin is kind of a lag. The price is a lag on gold to 180 days or 90 days
Can
between
be
kind
said.
of that. And there's a lot of charts that can sort of prove that sense. So it could be. Have we still got that chart, Mike? Uh,
I
the
Let me have a look and see if I can find. I didn't see it, but if
Is it?
let
It
me have
might
a
be the
look.
next slide. I think it might be the next slide.
No,
Uh,
it's
it's
not.
not
Maybe
there.
I inadvertently.
Okay.
Let
I
me
guess
just.
I could maybe bring it.
I'll have a
I
look.
could bring it up. Could bring it up. I just thought it might be. It's something that I don't do myself, but I thought it could be an interesting one.
No, I didn't see it in
Uh,
your. I didn't see it
okay.
in.
Well, I
No.
guess I could show the guys really quickly.
Yeah,
Um,
yeah, for sure.
if I take the screen, I just thought it could be an interesting one for the guys. Um, and it's maybe something that we can chat about in the forums or
There you go.
whatever. Can I? Okay, main screen.
I think that's you.
Okay. All right. So you should be able to see. Yeah, you should be able to see this. Okay. So if we just look at a daily chart, and I've just added on a real simple, basic RSI, and we just look for when the market. So this is Bitcoin versus gold. So when this is going up, Bitcoin is more dominant, and when it's going down, gold is more dominant. Yeah.
Interesting.
Um, so let's go back. Let's just do a year, okay? So
Mm.
interestingly, here Bitcoin's going down. So if we tied in, this is quite crude, but actually there's divergence here. Um, if we looked at this, that maybe we get a low here, RSI's oversold, and then you get another low with a higher RSI, that you could then sell out of gold into Bitcoin. So now you're in Bitcoin, and up here again you get not quite divergence, but you do actually. Yeah, you do. So here we're overbought. We put in another high with a lower RSI, and we sell our Bitcoin in December, and we rotate into gold. And in the beginning of March area, potentially rotating back into Bitcoin, as Bitcoin's outperforming at the moment. And yeah, maybe you've come out of Bitcoin back into gold. But I think it's something to just have a think about, because I agree with you, Mike. These two assets are, gold's come into the fore really because of the uncertainty in the markets and so on. And Bitcoin has that case as well. But if it has a lag, then yeah, it could be we could trade it as a pair.
I love this idea. So just to the bottom chart there, which is the RSI. So is it the blue line? So what's the blue line telling me? Is that the RSI on?
So basically, just maybe a quick RSI lesson for the guys. But like, if we go under 30 here in the white, then we're oversold. And this is just one indicator. It's like one dial on the dashboard. Okay, it's not everything, but it is quite good on a daily chart. I've always found it to be quite a useful tool on a daily chart. And then, of course, we're going to add all of the other things and the skills and techniques that you have. But yeah, and then when we're coming up here, RSI is over 70. So it's showing us that we're getting a little bit oversold. But normally what I like divergence, that we actually get a high, but we get a higher high, but a lower low on RSI. And that normally signals for me that the potential turn. And we've had that a few times. We had it here, low, a low, and then a lower low and a higher low. And here the same, a high and a higher high and a lower high. And then this one was just a turn. So, but I think could be something interesting. Yeah, it could be for sure. Could be for sure. But I did think an interesting one.
It wouldn't be that hard to maybe bounce backwards and forwards the criteria that would mean that you might rotate. We'll create a little EA, because that wouldn't take me that long, and let's do a big back test on it to see how it would have performed on the back of the criteria that you mentioned. Just as a fun exercise, doesn't have to be pretty complex, and we'll just bring it back to this forum at a future point.
Cool. And it may be a different time frame. It may be a 4-hour or 12-hour or something like that. Works better.
Or we can look at extremes of RSIs. Maybe we sort of alter the standard 30-70 to a 25-75, and we can optimize for that and see what we come. That'll be fun.
Yeah. Anyway, I thought as the Bitcoin, well, maybe you could do both.
I really like that. That's a great chart, Cam. Thanks for bringing that. Perfect.
Cool. Shall I hand you the screen back?
Yeah, I can rip it back, mate. There we go.
Okay, lovely.
Right. Okay, so what we thought would be quite cool to do is we haven't checked any other cryptos versus gold, Stephen, but we'll maybe have a look at that. Thoughts on the effect of Chinese gold find. I haven't come across that sign, but it's worth having a look. That's interesting. 83 billion.
Yeah, they found a lot of gold. But I think I don't want to say gold price is manipulated, but it can be as they put supply in.
Yeah.
You know, that supply
Sure.
thing, yeah, can be a bit manipulated.
Yeah. We thought we'd maybe pop up a chart pick for each of us. I'll just quickly go first because Cam's done a bit more. Again, as he presented on the conference at the weekend, and many of you guys who tune into Cam on a regular basis will know what one of his favourite stocks are at the moment. So I think I'll go first, then I'll hand the
Cool.
reins over to Cam again, if that sounds okay, mate. I'm still liking Nvidia. There are a few reasons. Obviously, AI is not going away. It's just getting better and better and stronger, and he's with us and will continue to be with us for some time. And it makes sense to possibly invest in the leader, and I think Nvidia is that for a few reasons, which you can see on this slide. Certainly, the GPU technology is Nvidia is way ahead of the game, and Nvidia is leading sort of the ecosystem adoption into some of the major cloud platforms. Nobody's hanging away. They just keep on belting expectations out of the ballpark with any earnings that they put up. Obviously, they've got some strategic partnerships in place which are going to help them. And it's just going to continue looking stronger and stronger. So much like I think Cam's pick, it's worthwhile looking at any pullback in Nvidia as a potential opportunity. If you do like the idea of Nvidia, then of course we need to answer the question, well, look, what price would be interested in this? Well, if you were long, I'll put two lines on this, and I think that this move, we had obviously this big drop that we saw here, and then the subsequent bounce through April and into May, a little bit of a pause. I liked it at around about 130 based on previous price action. It was sort of resistance for a short time there, but you can see how many times it consolidated around that 130 level. Little pullback over the last week, back to around about 137, but there's a clear line in the sand here at around about 150. So short, medium, or long term, I don't think Nvidia is a bad place to be. Short term, you could take it. Could take a small position up to 150, and then should it break 150, that's going to just open the floodgates, I think, for a heap of buying pressure. I would see this up to $200 within the next 3 or 4 months, to be honest. It's once next earnings come along, unless there's any dramatic developments that halt the processes involved in AI, which I don't see happening for a nanosecond. I just, like Nvidia, invest in leader is where I would be, and a short-term opportunity as well. I mean, you can baby step into this if you are interested in this in the medium term, then something up to 150 that's a relatively small size, and then accumulate as you go through. If it doesn't look as though it's going to reach that, rip it off around 150, and then look to be poised to for a 150 break. That's how I'm seeing it. And that would be my pick for really the coming few weeks. So that's really where I'm at. Do you think we might see big sell around the double top mark? Or that's back to gold? Okay. Thoughts on Nvidia, Cam?
Yeah, I mean, Nvidia is something that I'm invested in. We bought in on the 7th of April at $87. So we're still right. Yeah, we're still riding that. I had a profit target at 136, but I decided to ride it into the earnings. That I thought the earnings would still be good. Earnings were good. We took a bit of a dip, or a little bit of a dip back to 135. Still think above 135, it's probably decent. I agree that the 150s, I like your bullishness on the, what was it, 200 to 250, Mike? We might have
Yeah,
to put that on the board for Mike and come back to you on that
sure.
one. But that, yeah, I mean, that would be great. I'm looking, I think, around on 165 in the shorter term. So yeah, I mean, I think it's a great stock, and I think one of the big points is that there is so much about AI at the moment, but what stock do you pick? You know, and I think for myself, one of the safest is just going with the one that's a clear big hitter. You know,
Yeah,
I just don't see the small cap companies. I think there's just too much risk in the small cap companies when there's, you know, major cap like Nvidia um, there to invest in, and it's volatile.
sure. I, yeah, I would agree with you. Smaller cap. It's just the, I know there's no such thing as a sure thing, but this appears to be quite solid in terms for a number of reasons, not only technically but fundamentally as well. I'm not going to cover it today, but if I was to go outside of the stocks, I would be looking at yen crosses, bullish on yen crosses, particularly possibly USD. I think the BOJ are going to. The feeling is that they are going to raise rates again pretty soon. That combined with US dollar potential further US dollar weakness, I think the US yen might be worth a nudge from an FX point of view, but we'll maybe review that on another session. I'm going to hand it over to Cam with Tesla. Over to you, mate. You tell me when to flick slides forward.
All right, let's
We'll
jump
start
in.
with
I,
this
I
one.
think it's no secret if you guys are following me or seen anything from me recently. My biggest pick for 2024, 2025 was Tesla. We started buying last year around the 150, 160 mark. And I thought this was really interesting because, you know, back to that, you know, sell in May and go away, and you would have been absolutely steamrolled if you'd sold in May this year with the S&P 500. And you know, you see a little bit of information floating around of going, well, yeah, seasonality, you know, the Mag 7 are going to come off in the summer. Well, it's actually not true, actually, for Tesla. It actually typically rallies seasonally up until September. September is generally the worst month for for like every market that I know. If you take all of the global stock exchanges and you look at over the last 50 years, there's only one. I think there's only one negative month, and it's always September. And it's interesting because it's also the same for Bitcoin as well. But you know, if we're thinking about, you know, seasonality for Tesla, look at that. June is a good month, and we've got a load of other stuff happening. We've got the robo. Maybe let's just get the next slide there, Mike. I think I might just be giving everybody a. Oh, here's my chart. Okay. So this is my chart. So that just highlights where we bought on April the 7th on the dip. We got in at 215. So we're running that at the moment, and kind of targets to start taking a little bit of profits out of the market at the 395, which I told you guys on the Go Markets webinar. I also told you guys where to buy around the 290, 250 mark. I don't know if we're going to get back there. I mean, if we get some shocks from tariffs and whatever, something that, you know, blindsides us, I think we could get back there. But I don't know. I'm starting to feel that we need to, maybe even with my guys, I might start putting a little bit more in on small dips at the moment. If you can see the volume from the side, you can see that we're on pretty much of a shelf at the moment. We got through that resistance at the 350 level. We've pulled back a bit, but you know, if we hold this now, I think we're going up higher. If we don't, you can see the next shelf down is around about that 300. I mean, I think I mean, if you can get anything below 300, I think it's a great buy. But even, maybe it's the low 300s now that we need to be looking at. So
330
with
looks sort of interesting if we look sort of back here. It's about 330 level, isn't it? Which it's
Yeah,
tested.
I mean it dropped to 330, 340. I'm sorry, 334 or something like that yesterday. I was looking, or 332, and these things have moved so fast by the time I'm making a decision and thinking about telling the guys it's gone.
Sure.
But we're fairly much allocated already, but I do want to try and get a little bit more allocation in, particularly with RoboCab launching next month. Maybe, Mike, if I can get the next slide, just give the guys, you might have already seen this already, but the case point for Tesla, and maybe I'll just summarize all this at the moment, like Mike's saying, and actually what we're potentially coming on to. My focus is disruption, is AI, is really energy. Autonomous vehicles, which Tesla are coming out with, and the humanoid robots. I think that's really where, and big compute. I think that's really where we're going. Where's the market going in the next 3 to 5 years? So Tesla, very much known, of course, as an EV company, has the best-selling car in the world, the Model Y. But I really think we need to be looking at it more from the self-driving autonomous vehicle perspective that RoboCab will launch next month in Texas. Basically, an autonomous vehicle that will drive itself. And Tesla just have huge scale to really roll that out, which I do think with the very few minutes we have. But for me, this is like a complete transformation in transportation. And we do have a sort of a little bit of an iPhone moment on our hands now. When it's launched, do we get the sell the news event? Possibly. So maybe we'll watch out for that. Maybe we get a dip when everything starts happening. But I think for the street, for the institutes that do like to see things happening, there's been really no valuation given, or not till the last few weeks, no real valuations given to RoboCab or Optimus in the analyst prices. So I still think Tesla adds really, really great value. And then the next slide, again, Tesla's
Is that the
focused
12th
on.
of, is that the 12th of June?
Yeah, it is the 12th. It is the 12th of June. So let's see. Elon's at it. Again, very, very quickly, you guys probably saw this before, but Tesla Energy is pretty massive, big down in Australia as well. Huge need for energy, and later, further down the line of humanoid robots, which we're starting to see some progression there. We've seen the dancing robot, we've seen the Optimus, doing certain things, and Elon's on about 5,000 units this year that will work in the Tesla factories. But huge moving forward, but a little bit further down the line towards probably 2027, 2028. But they're my kind of cases for that. And you've got analysts like Kathy Wood coming out with valuations of $2,900. But for me, Tesla's one of those. It's kind of like my Bitcoin moment back in 2020. Where we've got 4 or 5x. I think we can get a 4 or 5x from current levels. So if you want to look at the long term, I think you're going to be in a good place. If you want to trade in and out of it with a very volatile stock, I think that gives everybody an opportunity as well. So that's my pick for the month. But really, there you go. It's my pick for quite some time to come as well.
Great case.
Yeah.
That's really detailed. That's fantastic information, guys. Right. Okay. Let's. I'm going to really go through this quite quickly. We can do some more on this later, but obviously we've sort of discussed AI. What we're also interested in, of course, is what impact is it going to have on price action? Does it alter the way technical analysis is run forever with many? If we look here, there was a survey last year that suggests that 86% of hedge fund managers have given their staff access to a generative AI tool, suggesting that we are going to increasingly see it in trading. It is here. That's the reality. There's many institutions use machine learning and uh, as the basis for developing automated trading. So it isn't going to go away. So I thought very, very quickly, just top 5 potential impacts. I think um, one of the things that I keep on seeing is this idea. Obviously, arbitrage is one of the more popular um, techniques associated with some hedge funds, some institutions. But the thinking is that inefficiencies will be quickly swallowed up. There'll be less and less arbitrage opportunities. So that might be interesting. There'll be more algo-driven volume. And the thinking is that one of the things that machine learning may do is be able to predict what general sort of EAs and general algos are doing, read them, and of course subsequently interact their trading behavior with general automated trading models. So that's going to further impact potentially with a shift in what defines a setup. So I think if we look traditionally at what technical analysis is about, it's about looking at traditional patterns that suggest sentiment changes and certainly there is a move, and one of the things that we've been trying to look at with the EA stuff is more structural emphasis. You heard me talk on Saturday about the idea of inclusion of market regimes into some of the EAs we're doing with the idea that the performance of any system is dictated significantly by what's happening in the underlying market. And I think that's there's a lot of institutions which are looking at that sort of structural emphasis rather than simple, is it a double top, is it a double bottom sort of vibe. In terms of what trends look like, there could be an acceleration of trend initiation. So once a trend happens, I think the trading volume as some of this clicks in is going to be quite significant and possibly a quicker trend exhaustion as because there's got to be both sides, of course. It may be that we see profit taking algos hitting in earlier. And the final one that I sort of thought is sharper reversals. So once that exhaustion appears to be the case, then we may get a reversal which happens really quickly. All of which is really difficult to manage if you're a discretionary trader. So I mean, there's two things, of course. First of all, we can look. That's what's important is how do we trade this? So we can look at alternative ways of trading market moves, but also get the potential for hybrid EAs where there's some manual, some discretionary input and some automated input is one I think which is worth looking at. Just one thing just to take away. If we look here at just a simple US yen chart, then there may be a couple of things that if we do get an acceleration, maybe the idea is to pick the middle of the trend. I'm not sure it'll draw. Let me just see if we can draw on this. No. So rather than sort of getting in here on a standard breakout, or here on a trend continuation, then what we might look to do is pinch the middle part of the trade. So once we have confirmation that something's going on, we're in sort of here, but we're out maybe here. So rather than waiting until there's evidence, if you take the idea that trends are going to be exhausted quicker and reversals are going to happen, reversals are also going to happen quicker, then maybe aiming for the middle portion of a trend is the way to go. There's a number of different ways you can do that. But I think this is worth looking at as a potential strategy. So once you've got trade confirmation underway, then look to, as soon as there's any hint at all of this, then you might just take it off and wait for the next ride to the upside. So looking at this, trading the middle 2/3 no, that's not. So let's say we split this into quarters. It's a better way of explaining it. So maybe we'll look to trade quarters 2 and 3 and be out on 4. So I think this could be this mid-trend pinch could be the way to look at this if those things come to pass where we're going to see that those impacts on price action. I'm not going to labor on this too much, but I just thought I'd put it out there. It's something we can sort of discuss later on, give you a few more examples and maybe even a strategy or two. I'm going to pop it back to Cam, who's obviously, as well as his interest in the US, obviously has historically had a key interest in what happens on the European front. We've got European CPI, which may actually be out now. I think the flash CPI numbers are due today, and then we've got an ECB rate decision going forward. But I'll pass it back to you, Cam, to sort of talk through your sort of views on what's happening on the European front.
Okay, well, I mean, my European front is the DAX, so really that's what my focus is, and yeah, you can almost just wipe everything. Yeah, you just we're in price discovery with the DAX in terms of we're in new highs. The market seems to be like in the current conditions, and we can see that again from this massive move up. Again, this is where we bought in for the long term down there, and now we've had a little bit of a pullback. But in saying that, yeah, so my views on Europe are more, very much so from a DAX perspective and a bit of seasonality as well. We've definitely moved through now. Normally from June on, we've moved through the best 8 months of the year. So now for me, you can see I've got a little bit of a profit target a bit higher, but I think it's time to maybe start putting stops below some of that support, that lower support there, as we might, move sideways in the summer, and then may possibly expect a bit of a pullback towards September. But market's still looking positive at the moment. Today, I think I said to the guys, the market's still positive above 23,800. I don't know where it is at the moment. I think, yeah. So we've had a bit of a bounce. So yeah, I guess that's where I'm at. Rates tomorrow. We don't. What are you thinking on the rates tomorrow, Mike? You think we've got another cut?
Another 0.25%, I think, is the most likely.
Yeah. Yeah, I think that's going to be the case. And then we had a big push, didn't we, on the back of them easing the budget for military, which really pumped a lot of the European stocks.
Yeah, that would be it would be down to 2% then, wouldn't it? When was it last at 2%? Remember?
Yeah, no,
that feels very
long time.
But that's but yes, I think and then again, you can't sort of escape the tariff impact. Has there been much reciprocal noise after the steel and aluminium tariff hike?
I don't see anything.
No,
I haven't seen really anything happen at all.
I was expecting a little bit of pushback. Maybe they're just waiting to see if it dampens down in the next couple of days. But
yeah, but I think that Europe are gonna get to around about the 10% mark for tariffs. I think it's not a done deal, but I think that's where it's gonna end up. And I think the markets are fairly comfortable with that.
Yeah, indeed.
Right, Mike, we're over the hour. We're over the hour.
Okay,
so we wrap up and maybe see if we can take a few questions, because I appreciate
let's
for the replay for people. When I see something over an hour, I'm like, that's going to be longer on the treadmill.
We wanted to give you 3 tips. We'll just finish off by doing that. And I think today is sort of not been just about what can happen, what has happened. but we want to look forward in terms of our decision making as to what can happen next. Context is king. To just have a look at a chart and say, right, that's it, is not the way to go, particularly right now. Then Cam made a great point at the weekend talking about leverage and non-leverage approaches. We might just want to make a comment on that. We'll maybe explore that in a bit more detail next time we get together. I think I was really...
Yeah, I think that would be a good session. Yeah, just very, very briefly, for a long time, I really just focused on leverage trading. And these days, I still leverage trade, of course. But yeah, I think this is another session, Mike. But basically,
Yeah,
I think it's nice to have a combination of balancing what's in your leverage trading account, because let's face it, I mean, we're not on a go markets session anymore, so we can, it's
no,
not that we can't say what we want. It's maybe a bit rude to say that, look, hey, we all know that people on leverage brokers, it's about 70 to 80% of people are losing. Okay, so your money is always at risk, not from the broker going bust or anything like that. The money's at risk because of yourself. So I really sort of now like to keep a smaller portion. Now it's not an exact figure for me. About 5% of my portfolio in kind of leveraged brokerage, and that's enough for me to trade on the back of, and then focus on moving some of that capital to really quality assets that have volatility. And you can get some phenomenal returns. I mean, look at what's happened in since the 7th of April. We're looking at Nvidia up 50%. We're looking at Tesla up 50%. Solana, which we put into, is up 80%. So these are phenomenal returns in quality assets that you'd be happy to kind of hold. So I like that approach of even looking at a sort of like a cash flow perspective from trading, a midterm, so trading, maybe leverage, non-leveraged, and then a longer term investment, sort of making it a little bit more holistic, and averaging out those returns. But yeah, I won't go on too long about that, but I think that's maybe a separate session, Mike, if the
yeah,
guys
absolutely.
want to do that.
Yeah,
Yeah.
I think that's a really good thing to have a look at, or at least invest more times in a single session to do that. And finally, look, we'd be really keen to, if you've got any comments or questions that that you want to ask, then please put them in now. We don't mind hanging around for a little while longer if there's something that that's really compelling, or you may have just... Lots of thanks. You're so welcome.
Cheers, guys. Yeah, thank you. But yeah, if there's a question or two, no problem.
I think probably great stuff. Oh, okay. One last question from me then. How about the next bar live in Bali later this year? Type in yes if that would appeal. Okay. An interactive podcast. Yes, that's what we're trying to do. Okay. So there's a few yeses. Is that it? And we're going to do any more stuff. All right, guys. Well, look, from my point of view, certainly thanks to you guys for rocking up. It's always a pleasure and a privilege to share some stuff. And secondly, of course, massive thanks to Cam for as you said at the start, it's been something we've been promising to do for some time, and it's great to make it happen.
Yeah, absolutely, Mike. It's been fun, and I guess for the guys that maybe know me and don't know you, where can they follow you?
You can drop me you can pop into Trader IQ, but we've been talking a little bit about what we can do to... Obviously we've got Cam's Telegram channel, which is his thing. We might have set up a next bar Discord channel as well. So keep your eyes peeled for that. Because you've all registered for this webinar, what we'll do is we'll create a little group email. We'll send out the recording plus the heads up for when it's next. I've made the sort of webinars an ongoing, if you like, a roll-in session. So you'll be informed automatically of that. Cam, have you got your Telegram link that you can pop
Yeah, I just popped
into
it in there,
your
guys. If you're
chat?
not already there, lovely to have you along. I do post a few insights as we roll through the week of what I'm thinking, or if any major news events comes up, what I'm kind of thinking about, or if things come across my desk. So would love to have you there. You can hit on the
Yeah,
link.
wonderful.
Um,
Wonderful, guys. I'm part of it. So so click on that link and get part of that. And of course, thank you for all your participation. Your questions, your comments have been great throughout. It's been wonderful to have you here, and I hope it gave you a kick. And thank you very much for all the kind comments. Anyway, from me, I'll love and leave you. You guys take care, trade safe. Could be an interesting few days ahead, but isn't it always? So we'll catch you very soon, and flick the button over to you, Cam, for any last words or thoughts.
That's it. No, just a big thanks to the guys for coming along. Mike, we finally did it, which is cool.
We
And I'm
did.
sure
Wonderful.
I'm sure episode 1 out, and we'll let you guys know when we do this again. But thanks for staying with us, and yeah, speak to you all soon.
Fantastic. Take care, guys. We'll catch you very soon. Bye-bye for now.
Cheers.